Hello and welcome to another update video about DOT. Polkadot continues to show some weakness. There's still no confirmed low in place here in this region, in this orange support area. So let's talk about the short-term bullish and short-term bearish scenario. It hasn't really changed from the last update, but there should ideally be a little bit of movement soon, because this really standing still doesn't really last very long typically. So what are we looking at here? So first of all, let's talk about the Elliott Wave structures first. There are two structures I'm observing at the moment, both bullish, as long as the support at $4.39 is holding. So there are two bullish scenarios. One is generally what you would prefer to have a clear chart, somewhat clear. It would also be a diagonal pattern in the yellow count here, which isn't great, but at least it gives us some clarity if we get 5 waves up in this diagonal pattern. But then it really needs to start moving now to the upside. A break below $6.28 is something where I would consider that the yellow count is dead. But in this move up, we have a 1, we have a 2, we have a 3. This would be a wave 4. Okay, if it's not finished, another marginally lower low would be acceptable, as long as the golden ratio level is holding, the 61.8 retracement. And below that level, yep, the diagonal will not be invalidated. A few people asked me, because, you know, people asked me, okay, but isn't it allowed that in a fourth wave, well, in a diagonal, the fourth wave and the first wave overlap? Oh yeah, of course, you know, it allows for an overlap. We would then have a 1, 2, 3, and a very, very low wave 4. And some Elliott Wave analysts might count it that way, but I can tell you that in my interpretation and my experience tells me that a wave 4, even in a diagonal, if it's below the golden ratio, or at least if we sustain below that level, then typically it's not going to work out as that count. Okay, it will then likely be something else. And that is when it would shift to the white count. But let's talk about the yellow first. So in the yellow count, again, a diagonal, 628 needs to hold. It's just my level where probabilities shift. It's not an invalidation level, but it's sort of, you might call it, I don't know, soft invalidation, where it just isn't going to work out most likely in that scenario. But as long as that level is holding, a fifth wave to the upside might unfold in wave 5, targeting, well, ideally $10.83 plus, okay? So this would be the yellow count. In the yellow count, just 628 is important. Now, obviously, what we can all see here is a head and shoulders pattern. We see that on some other charts as well. Obviously, a break below it would send us down lower, most likely in the white count. But still, the 628 level is an important Fibonacci level. Yeah. But anyway, that could take us down in the white count, which is ABC in wave A to the upside. Then the B wave to the downside would be unfolding right now, A, B, C. And again, some Elliott Wave analysts might call that here a wave 4, right? Just a very deep wave 4. It just doesn't look right. It doesn't have the right look anymore though. But that could be then my B wave, and then a C wave to the upside could still send it higher towards $14 to $15. So as long as it's a bullish market overall, we could give it that chance. Doesn't make it a high quality trade setup, because anything that follows a 3-wave top is not very reliable. But as long as the pullback remains corrective, we could go with that, okay? And then we have support at 584, 519, and 439. And yeah, already I think a break below the neckline of that head and shoulders pattern could shift probabilities towards the white count. In both scenarios, obviously, both in white but also in yellow, I mean, this here is a potential turning point. Not confirmed yet, and it looks a bit like a bear flag, like a mini bear flag here. But it's possible that also in the white count, for example, we see a little bit of a bounce before we go down lower. And it would mean that this structure here is just an extended correction. So where I've got the wave B potentially as having topped here on the 11th of January, it's possible that this was only the A wave of a B wave. B wave to the downside unfolding right now, maybe complete, and the C wave can then still send us higher. So A, B, C, B wave is actually here, and then we could move lower from there. It's a similar structure to what I see on the Matic chart, what I see on the AVAX chart, where we could see that larger bounce. It's nothing that can really be, let's say, predicted, but it's something that we can, that we can watch for, really, and we have to watch for. Obviously, if that head and shoulders pattern really works out, then we should see a more direct breakdown. But overall, I think the bottom line is we still have two bullish wave counts here. Below 628, the first one is going to be taken out. Could still be a B wave pullback then. Wouldn't make a great setup, but obviously quite favorable from a reward to risk standpoint. Maybe in terms of probabilities, not so much. And I think this gives you all the parameters to watch for next week. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.